Hello. Today we will do deferred expense and deferred revenue and accrued expenses. Strange terms, but let's start. What exactly this words means? I mean, what is deferred expense? What is deferred revenue? And what is accrued expenses? So we will go by some examples here. The first one, deferred expense. These two, you can say it's mirror, it's complement each other. I mean, it's exactly, the first one is exactly opposite to the second one. So first we explain the first one. It's like, deferred expense when we are starting it. So assume that you pay rent for your showroom. So what is rent? You pay rent for your showroom. Let's say that is 12,000 per year, and you want to account it. So what you normally do, you will either create an invoice or you go for a journal entry or something like that. So normally you will, I mean, this is you will put it in account for the same day that you are making a payment. So what you do normally, you will, from your bank, you take 12,000 and to where it is expense account, right? Expense account. Any expense account. I'm not saying, okay, I will put it here, rent expense. Fine. So what happens here? When you're taking from bank account 12,000 and putting it into rent expense account, or you can say vice versa. So what happens here? The expense side of your chart of accounts. So I'll show you the chart of account. So what happens here? The expenses side, direct expense and other expenses, whatever indirect expense. So rent is generally come on indirect expense, right? Because it's not a stock transaction. The office rent is coming. Here you can see office rent is coming here. It's in expense side. So if you remember, if you have watched all this series, so you know that when you are taking a profit and loss statement, expense will come. Expense, I mean, what is profit? Expense, no, income minus expense or revenue minus expense. That is the profit or loss, whatever it is. So what will happen? So if you put all the money into, so on which date you are putting it? Let's say that you put this money on January 01, 2023. So you put this money from bank, I mean, on the rent expense, you are putting this money on January 1. So what happens here on the profit and loss? If you are taking a monthly profit and loss, the entire amount will record here in the January, 12,000. But actually this 12,000 is for January, February, March, April, May, June, July until December. So it's not just for January. So, but actually what will happen, let's assume that you have 10,000 revenue in January and you have 5,000 expense. So you obviously you must be having 5,000 profit, right? So, but if you are paying 12,000 rent here, so it will be a loss for you. That in January it will show 7,000 loss. But it's not correct, because this the month January will have actually 1,000. That's the rent for January. Another 1,000 is for February, March is like that. 12,000 for 12 months. It's 12,000 for 12 months, and per year means 12,000 for 12 months, and each month the expense is 1,000. But just because you are paying it in January, what happens? It is your January accounting will get completely messed up, and you always think that January is in loss, but February, March, and all in profit. But it's not the case. It should be equally. There should be a mechanism to distribute it equally. So that's what we say deferred income, deferred expense. So what we do in this case, even though we pay 12,000 in the first month in January, we account it. We just keep it in a temporary account. That is, this bank account and everything will come inside asset, right? Inside asset. So your bank account, everything will be in current asset, and we will keep one temporary account, or you can keep it in current asset. A temporary account is called what? Deferred account. Let's say I created it already, but normally you don't have it in the charter account of ERPNext, but you can create one here, deferred account. So what happens here? From your bank account, it will go to this account. So both transaction happening here in current assets. Both transaction happening in current assets. Then from this deferred account, it will go to rent. So rent is here. So office rent is here. So from this deferred account, this will go to the rent each month from deferred account to office rent. Each month, January 1,000, February 1,000, March 1,000. Okay. So first you will keep entire 12,000 here in deferred account in January, but each month 1,000, 1,000 it will go to office rent. So when you are taking profit and loss statement, every month will be accurate, because this 12,000 transaction, as I told you, this transaction, it is, as it is from asset to asset, it doesn't make any difference, because if you make any transaction between assets, it will not make profit and loss. If there should be any impact on profit and loss, it should be in the expense or in the income. So every month we will move 1,000 each. So first we will make, again I repeat, I'm sorry for repeating it, just for the sake of clarity, from this cash or something we will move 12,000 here, and every month from this deferred account we will move 1,000 each in January, February, March, April, May, June, July, all to the expense account. So at that time you will have every month 1,000, and it will be reflected accurately in your profit and loss account. So when you're taking profit, after that you will see, if you take a monthly profit and loss statement, you will see each month will have 1,000 expense extra. So here January, February, if you take it, you will have the expenses 1,000 extra for each month, not in January, etc. So how we do that? That's next. So you can see an ERPNext documentation here. I'm not reading it or something, but I'll because the document is perfect, but it's not explaining like the way for me, or for the accountants and business owners. It's kind of technical. So I'm going here on the ERPNext, and I'm taking accounts settings. On the account settings, there is where is that? Okay, there is a deferred account settings. You can see it here. Deferred, here, deferred account settings. And this part, there is one days, and there is automatically process and this and this. Okay. So first one, first, there is, you can see it here, book deferred entries based on days and months. So you naturally think that this is, every day you need to post if you select day, or every month you need to post if you select month. No, that's not true. That's not correct. This deferred entries based on months means, you remember our example, that's 12,000. That's 12,000, right? So if it's 12,000, if you select here months here, every month will have 1,000. Every month will have 1,000. But if you select here, days, what happens? It's not posting every day, but it's posting every month itself. But what happens? It will, for February, there is only, January, there is 21 days. January, 31 days. February, 28 days. March, 31. So it will consider the days. It will consider the days. When you're selecting days, when you're calculating monthly, it will consider days. So the calculation will be at that time, 12,000 divided by 365 will be the daily amount. And for the February, you will calculate it. For February, you will multiply it by 28. For January, you will multiply it 31, like that. So effectively, what happens? On January, you will have more, February less, March more, April less. That kind of situation will come here if you select days. But normally, in this part of the world, you need to select months, because especially for rent and all, nobody's considering days. But there may be something like vehicle or something, it may, but I'm not going there. This is months. So now there is another option you can see here, automatically process deferred entry. What does that mean? So it's automatically process deferred accounting entry means, if you don't, if you are selecting this, then it will, I'll just keep it here. If you are selecting this, automatically prepare, every month it will do an entry automatically. You don't need to do anything. It's just that you, every month, the day you mention, first of every month, then this entry will process that one. I told you that 1,000 real goes from deferred account to the expense account. Every month it will keep going unless it's finished. So, but if you untick this, it will not happen. You have to make it. I'll show you how to make it. So if you untick this, you have to make it your own. If you tick it, then it will automatically come. For the demo purpose, I will untick and I'll do some transaction, because if I put automatic, I cannot show you how it is working. Here, then there is, you can see book deferred entry via journal entry. What does it mean? If you are unticking that, this, if you put it here, it will create a journal entry. If you tick this, it will create a journal entry, right? But if you are unticking this, it will not create a journal entry, but it will be like in general ledger. In general ledger, it will be shown there. In general ledger, it will be, the entry will be there. But if you take journal entry, it will not be there. That entry will not be there. So if you select it, again I repeat, if you tick it, it will create a journal entry. But if you don't tick it, it will be there in the journal and GL. So, but you cannot see it on the journal entry. Accounting will be correct, but it will not be seen on journal entry. And here, if you put submit journal entries, so every month when it's creating, what happens actually, if you tick it here, submit journal entries, it will automatically submit. But if you don't tick it, what happens? It will be in a draft mode. It will come here as a draft entry. It will come as a draft entry. But if you put it tick here, it will automatically submit and you don't need to do anything. So these are the three settings here. These three settings. Now, this is it's in the general account, but this thing is here. Normally, everyone does this automatic. But if I put it automatical, I cannot demonstrate you because it will happen the next one. So I'll just untick it here, but don't untick for you. And here there submit journal entries also I'm unticking just to demonstrate you. But this normally everyone ticks it. So it's just like that. Now, how we process it, because we have already did that, we understand the concept. Now we need to actually execute it. So what happens when you're a supplier, I mean, when you get when you're renting something, they will send you an invoice for 12 months, invoice for 12,000, right? Supplier send you invoice for 12,000 in January. Okay. So this supplier, when he is sending an invoice, we have to enter it here, supplier invoice, right? So what is invoice? Purchase invoice. Okay. So you need to, it's actually a purchase in this case. So we will make a purchase invoice. To make a purchase invoice, you need an item. So I'll just add an item here. So I already have it here. So I just did another session. So I'll just, it is, you can create a rent for showroom or something like that. Then here, you can see there is an option in purchasing and sales. On the purchasing, you can see deferred. Can you see that here? Deferred entry. Deferred entry is there. So this entry, if you look at that, there is something called deferred account is also. So what happens here, when you are creating an item, it's not like Apple or something you just buy and eat. This is a rent, showroom rent. So it's a deferred separating each month. So you will just put it here, enable deferred expense. And there should be an account in the chart of account. I'll show you in the chart of account. On the chart of account, you need to have one account here on the current assets, because if current assets you will keep until the end of the year, right? So here on the current assets, you need to have something. This is I just created for another session, so you can just see it here. So you will create a deferred account. So here on the accounting, what happens? This 12,000 will go to deferred account. It will not be like normally where it will go when you are doing a purchase. When you are doing a purchase, it will go to stock in hand, right? So this not like that. And number of months, you can put it here. How many months this? I mean, it can be 12 months. So you will put now how many number of months that you need to keep this item. Also, I just saved it. So on the purchase side, there is deferred expense, and I just need to make it 12. And there is one more option that I'll show you later, but this is I don't want to mix it because there is option for sale also. I'll come there, but here on the purchasing, you can see it here, deferred expense, and okay, this other we are not covering today. So what happens now when you are making a purchase invoice with the same, with some, it's showroom, rent for showroom, and 12,000. I put it 12,000. And if you know, when once you create an item, if you don't have it there on the item master, you can put it here also, because here also this option is available. If you see that, here also this option is available. You can see it here. And you can put the deferred account and everything here itself. And you can put the expense header also here. So this expense header, you can change it, because this expense not supposed to go to cost of goods sold. So you can put it here, something like what expense I have. I don't know. I'll just put administrative expense, something it's normally it's rent or something. So I'll just put rent, office rent. So now you can put temporarily, what will happen temporarily, the all 12,000 reals or dollars, it will go to deferred account, but each month 1,000 will go to this office rent here. Okay, so make sure that these two accounts are here proper when you are entering this data. Okay, now once you create this and submit it, yeah, some setting here for branch or something. Don't care, but this is not your problem. Okay, now I submit it. Now let's say Neha. So I'm sorry for that big mess up. I'll just come back here and submit it. Okay, now it's submitted. Now, if you go to accounting ledger and see here on the accounting ledger, you can see what happened here. So here, this 12,000 went to from creditors. I mean, the creditor is the guy who giving you the rent, and it's going to deferred account. Here, it's going to this deferred account, and this office expense header against. When you read it, you will understand. I mean, when you look at the statement properly, thoroughly, you will understand what exactly is happening. This is against office rent, 12,000, and it's going to deferred account. So next what? Now this entry is over, and now it has no impact on profit and loss. I told you, because it's not going to expense account right now, but it will. We'll see. Now what I will do, there is, if you remember account settings, if you remember that, when you if you tick it here, you don't need to do anything anymore. Every month it will go 1,000 to expense account, the rent account that we have mentioned. But now I didn't put it here. The only reason is I just want to show you how the transaction works. So here we can put deferred account. So you select this option, new process deferred accounting. It's very important. This is, again, I repeat, no need to do it if it's automatic. Okay. Now it's an expense, and I'm putting it deferred account, and put any month. For example, this is if you are, if you put it from March to April, so only the April 1st will come here. So if you put April to May, you can put the date of this deferred account transaction unit. I'll just save it and I submit it. And when I submit it, you go back to the journal entry. So on the journal entry, you can see something. Where did I? You can see the journal entry. On the journal entry, you can, this is actually not come here. The reason is, one, if you open this journal entry, you can see the journal entries are in draft mode. Because why it's in draft mode? Because we tick it here on the account setting. Because I'm coming back here again and again, don't to confuse you. So here, if you put submit journal entry, it comes with the it will automatically post, but if you untick it, it will come as a draft mode. So here you can see every month. So that is in the posting date, and the whenever we post, so every month will automatically come from deferred account into office rent. So this is what happens. So every month it will automatically do that, and everything will be correct. Actually, now that's all about deferred expense. And okay, then you will submit it. So if you, I mean, you need to submit it, or if it's not automatic, you need to submit it. Now, if it's let's say deferred income, so this is just opposite. You are renting out something. You are renting out, you are not renting in. So what happens? You have a building. That building you need to give it to somebody else for rent. Let's assume the same case, 12,000, and every month you get initially you will get 12,000, but actually when you are accounting, so if you are putting it that as an income, because whenever you are doing whenever you are doing some transaction, you will put it on the same date. So what happens here? It will show as an income, 12,000 as an income, the same day on the January 1st, but it's actually an income for entire year. So you just think opposite of that. And when you're renting out something, you put everything in liability. I mean, it should be instead of having deferred accounting in current asset, you have a deferred income account in the liabilities. Instead of asset, it will be in liabilities. Then every month you put it 1,000 as income. So it's just opposite of what I told you, and I need not explain you what. So here what happens? So let me put it like this. So what happens here if it's deferred expense? Here I'll put there, and deferred income here, deferred income here. So what happens here? It will be, the deferred account will be in the asset, and the deferred account here will be in liabilities. And every month it will go to the income. Here every month it will go to, every month it will go to expense, I mean rent expense in this case. And here every month it will go to income. So this is the setting. So Here once again, deferred expense, the deferred account will be in asset. For deferred income, deferred account will be in liabilities. And every month from asset, it will go to expense. Every month from liability, it will go to income. So the accounting will be perfect. So that is, I think that's a decent explanation. Now we have, I promised something more, but it's just coming here because accrued expenses, or there is something that in this context we need to check. Accrued expenses. What happens here? Take an example, end of service for an employee. So what happens? Let's say he worked 1 year or 5 year or whatever. So end of that term, you need to pay him end of service. So companies, let's say you have 1,000 employees, some 500 are going in the March or any month. So that month you will find your company is in complete loss because you have to pay a lot of amount. So that's not acceptable in accounts because that doesn't reflect, because this end of service is for every month or every year. So you need to account it accordingly. So what you need to do by concept, where you need to allocate every month or every year, whatever, I mean, your accounting practice, every month you allocate a portion of it and put it in an accrued expense account. So where it will come? The accrued will come here. Where is it? Stock liability, duties and taxes here. Total taxes. You can see it here in the liabilities accruals. So I told you before, if anything come in the asset or liability, I mean, this if you will add it like a liability, for every month you will add a liability. So when an employee actually going out of job at the end of his service, so you will take from these accruals to your expense and you will manage it like you need to add it every month to here on the accrued expenses. Then it will show your liabilities perfectly, because you are not why it's not coming here in the expense until now, because it's not there. I mean, it's not paid yet, so you will keep on adding on the accrued. So when he's actually leaving, you will put it into the, I mean, you will just transfer from this accrued expense to his account. So that is actually, there is nothing special on that in the HR module and all. We have a provision for that, but in this context, there is no settings because it's just either payroll entry or it's a journal entry or something like that. It's nothing to show, but this is just because on the sake of explaining the term, I just put it there. So thanks for watching. If you have any questions on this, just send it to me. Let me know your feedback. Thank you.